What is going on, apes of the ape army? I want to make this video going over this article about hedge funds, and specifically Melvin Capital and this other hedge fund that have been getting completely destroyed shorting a lot of these stocks. And you would think Melvin Capital would have learned its lesson the first time around from GameStop, but they haven't. And I do think this is pretty funny, and this should be brought to your guys' attention. Now, I don't wish pain on anybody, not even hedge funds, but I do, for the simple fact that this is a taste of their own medicine. What they have been doing to screw over the retail investors have finally come back around to bite them in the ass. So I do think it is very, very cool, and we should go over it on this channel. Now, with that being said, make sure to tap, tickle, touch, or smash the like button, as well as comment down below and subscribe to the channel. Now, if you also want to support the channel and stay up to date with the moves that we are making in the community, myself mainly included, I send out all of my buy and sell alerts, but we source great trades and information overall over there. So make sure to check that out, link down below in the description, as well as get up to $70 in whatever free stock that you want using the link for public. It is literally free money. It takes about 2 minutes to do. No need to even link a bank account to get your free stock. Now, jumping right into it, guys, this was posted to Ortex's Twitter. It says Melvin and Light Street suffer as meme stocks rally again. We're going to click on it and go through this article. Industry estimated to have lost $6 billion shorting 5 meme stocks since the start of May. Melvin Capital and Light Street Capital, two U.S. hedge funds hard hit by a rally in stocks popular with retail investors in January, have suffered further losses in May. Melvin, the highest profile casualty of January's meme stock rally, lost another 4% this month, say people familiar with their performance. 4% on billions of dollars. They are getting completely wiped out, guys. You would think they would have learned their lesson by now, but clearly they have not. That takes the fund's losses this year to about 44.7%. That is extremely high. That is wild. That is ridiculous. The people said the S&P 500 index of U.S. stocks rose 0.6% last month and is up almost 12% in the first 5 months of the year. So 12% compared to 47.7% negative on the year. Absolutely insane. Hedge funds losses from betting against 5 popular meme stocks: GameStop, Bed Bath & Beyond, AMC, BlackBerry, and Clover Health, total about $6 billion since the start of May. Since the start of May, guys, we are whacking them. We are clearing their accounts, and a lot of changes are going to be made to the financial system overall, especially short selling and naked short selling. So this never happens in the future, and we have a fair playing field in the investment field, which I do think is the main driving factor around the AMC short squeeze, is to really change the system overall. So I am very proud to be a part of that. You guys should be very proud to be a part of that as well. If you make money or lose money, that is really not what is important here. This will level the playing field for everybody, but I do think everybody will make a ton of money, as we are seeing here. This $6 billion goes from the hedge funds to us, so I do think that is very, very cool as well. So it says total about $6 billion since the start of May, according to the data firm Ortex Analytics. Peter Hilberg, Ortex co-founder, said funds had recently reduced their short positions in meme stocks, but that the short interest remained at very high levels. New York-based Melvin, run by Steve Cohen, protege, I don't know how to say that, Go Blotkin, found himself at the center of the GameStop saga in January. Melvin's performance plummeted 53% amid a stratospheric rise in the share price. The fund, which in January sustained a $4.5 billion fall in the value of its assets from the end of the year, received a $2.75 billion investment shortly afterwards from Cohen's $0.72 Asset Management and Ken Griffin's Citadel. Citadel, the main enemy here, the driving factor of all of this fraud and corruption, is Citadel. So hopefully they are losing some money as well. But Melvin's assets have since further risen to $11 billion as of June 1st, according to a person familiar with the firm. After the extent of the firm's losses were revealed, Melvin said it had exited its bet against GameStop and reduced risk in its investments, although it still suffered further losses last month. How do you reduce risk in your investments and you still suffered a 4% loss in May? Hedge funds, right? They are supposed to hedge. So their goal is not to make a lot of money. Their goal is not to lose a lot of money. So obviously these guys have no clue what they are doing. It says stocks such as GameStop, AMC, and BlackBerry rocketed in late January as amateur investors coordinating their actions on forums such as Reddit and in some cases directly targeting hedge funds piled in. After falling back, these stocks have risen strongly again in recent weeks. The rallies have hurt both short sellers betting directly against the stocks and also managers with short positions in other stocks that have been hit hard in ensuing market volatility or as other short sellers unwind their bets. Others that have lost money include Light Street Capital, set up by Glenn Casher. Why am I so bad with saying names? I don't understand that. A so-called Tiger Club who previously worked at Julian Robertson Tiger Management. The firm, which also managed $3.3 billion in assets at the start of this year, was hit during the first quarter. Its flagship fund lost a further 3% in May and is now down 20.1% this year. 20% is a huge loss. If you were down 20% in your portfolio, you would be feeling like absolute shit. If you're down 40%, you just want to give up, right? Like Melvin Capital is. According to numbers sent to investors, the fund's losses in the first quarter were predominantly driven by losses on shorting, said a person familiar with its positioning. They gotta learn their lessons. Shorting is gonna be the death of these hedge funds and institutional investors. We are proving this over and over again with every single stock that we can correlate on. Just makes us one step closer to changing the whole financial system, and that is the main goal here. So like I said, if you make money or lose money in AMC, it really doesn't matter at the end of the day. This will level the playing field for all investors, and that is really what it is about. That is why I have a position in AMC. I am fully prepared to let this go to zero or go down 90% or 10x in value from here. Really, the main point is we got to stick it to these hedge funds, guys. They can't keep screwing us with these dark pools, with Citadel basically reordering our order flows. And now it is rumored that they are not sending these orders through for 15 to 21 days, letting a lot of these shorts get out before the real share price does come to light. So that's basically all I wanted to go over in this video. I found it kind of funny, and yet again, I don't want to come off like I'm spreading hate, want people to lose money, but they have to learn their lessons, and some people are going to fall victim, like Melvin Capital, and this other hedge fund is Light Street Capital. So that is going to wrap up this video. If you guys want more videos like this and appreciate the content that is provided, make sure to hit the like button as well as comment down below and subscribe to the channel. I watch the analytics on a daily basis, so by doing those three things, I know to make more videos like this, as well as if you want to support the channel, like I said, link down below in the description. And for a limited time, open an account with the link down below for Webull and get up to $2,300 in free stocks. It is literally free money for a very small investment. I do love the platform myself. Now, with that being said, you guys take care.